We know gold stocks are popular right now, but Artemis Gold shares have been beating the pack. The company has that newish Blackwater Mine in BC, declared commercial production this year. And those shares, as you can see, up 146% in the past year. We're joined by Stephen Dean. He's a mining veteran and executive chair at Artemis Gold. Stephen, thanks for joining us.
Andy, good morning. Always good to be on the program.
Tell us, what production are you at right now with Blackwater?
Well, we've only just reported our first quarter of commercial production. We only had 2 months of the June quarter in commercial production, but we're producing just over 20,000 ounces approximately right now per month. Per month.
Okay, so that puts you at about 240,000 at an annualized rate, quarter of a million ounces.
Correct, and ramping up as we've said in our guidance issued earlier in the year. Yeah.
You're already, you're in phase one, but you're increasing the processing capacity by 33%. That's going to cost you about $100 million, maybe 110 million. Is that US or Canadian? Can you tell me, Steve?
That's Canadian, Andy, and that's going to bring us from a nameplate of around 6 million tons per annum of processing capacity through to about an 8 million nameplate. And they are some really very capital efficient add-ons to the existing phase one plant that we only just commissioned less than 6 months ago. And we've already started that expansion, and we'll be at that nameplate by about this time next year.
In Q2, you reported an all-in sustaining cost of only about $800 US an ounce. That's fantastically low. Do you hope to keep that up in the future, such a low cost?
Yeah, the life of mine studies do indicate that that's what our life of mine US dollar AISC will be. We benefit from a whole suite of things, including a low strip ratio, good grade, low cost of energy here on the BC hydro grid, amongst other things, downhill loaded haul, which helps with our ore transportation and haulage costs. So it's all those things that come together that result in those costs. I've also always said too, in interviews like this, that one of the ways to get to a lower cost mine is to build a new one. Many of the large mines in our industry have been around for decades, and you've got maintenance costs, sustaining costs, you've got deeper open pits, you've got deeper underground mines, and that all contributes to an increase in cost. So if you have the advantage of a new mine like the Blackwater Mine, then we can sustain a pretty low cost, and in fact I'm told that in the lowest decile of AISC.
You're buying, for example, a vertical mill and expanding the leach circuit. Tell us, does a lot of that equipment have to be imported into Canada, or is it made in this country?
So the base equipment is imported. It's coming from Europe. It's a company called Metso, which is one of the big names in supplying large equipment in processing of facilities for gold, but no tariff impact for us. But it's imported basic equipment. The biggest cost attached to that equipment is in fact installing it, with the foundations and other parts. So all of that is, of course, Canadian sourced.
I guess the irony here is, with your low all-in sustaining costs, you have less leverage in the short term to the gold price than somebody with higher costs.
Yes, that's true, but I'd always like to have a big margin, or a large margin in any business, whether it's in the gold business or in the widget business. Sure. Margins always sustain long-term profitability and capital returns, and we've got a payback of this expansion from 6 to 8 million of less than 6 months at the current gold price.
So you have a distinguished career. You were the founder of Atlantic Gold that was sold to Australia's St. Barbara Limited. They had have a mine in Nova Scotia, and you're also a former president of Teck Cominco.
That's right. Yep.
So tell us what's your reaction to see? I know this is a bit off topic. What was your reaction when you saw Anglo American buying Teck? Were you surprised?
To be frank, yes. I think I was surprised, along with a number of people and observers in the industry. It is a truly a bastion of our industry in Canada, and I'm pleased to see that there's commitments to keep the head office of the company in Vancouver, and keep it Canadian. But I was a little surprised about the terms of the deal. But you know, there are a lot of smart people inside the company and advising the company, and I'm sure it makes sense.
You were surprised maybe that there wasn't a bigger premium for the Teck shareholders?
Yeah, well, two things. One, perhaps the fact that there was no premium for the B shareholders, but also for the A shareholders who have multiple votes. They didn't. They get equal consideration with the B shareholders. So that surprised me a little too. But as I said, I'm sure there's good logic behind it.
Stephen, thanks very much for giving us the time today.
Thanks, Andy.
Stephen Dean has been our guest executive chair at Artemis Gold. We're going to stick with precious metals. Sierra Madre plans to double production at its Mexico mine. We'll hear from the CEO.